So, as everybody knows, should know at this stage, we offer strategic metals to private investors as physical assets. And today, what we'd like to share with you is what characteristics determine what metals make the list, if you will. I'll just share, first of all, on the US Geological Survey, for example, there's 45, maybe 50 metals that are considered critical to, not just North America, but all nations' economic prosperity and increasingly military capabilities. Semiconductors is one very good example. There's probably 12 or 13 semiconductors in one smartphone. You can imagine how many are in a F-35 fighter jet or a nuclear submarine or aircraft carrier. So these are the critical raw materials to economic prosperity, military capabilities, and there's 45 or 50 of them. Now, not all of those 45 or 50 are rare, but they are all strategic, which means at this point in time they can't be substituted. Maybe in the future they will. So, what I wanted to share today is some of you may know this or may not. Our core business is we are an industry supplier. So, 85% of our business activities are we are selling these. We buy and we sell these metals to manufacturers. So we've on the industry side we've more than 4,000 clients in 74 different countries. It's very important people know that about us because if that wasn't our core business, we would have no business offering private investors to participate in the supply chain. It just there'd be red flags everywhere. But anyway, the point I'm making is, or the subtext to that is that out of the 45, 50 metals that we offer to to manufacturers, and out of the 45 or 50 that are on the US that are listed as critical or strategic on the US geological survey, there's only about 8 or 10 on that list that we offer to private investors, and we determine what characteristics allow them to make that list. And we'd like to share that with you today. One, because it's educational, and two, so you can see we know what we're doing. There's a strategy behind this. There's a winning investment strategy at play here, and the proof is in the pudding. One doesn't have to look any further than the historical prices on our website to see if you own these metals and hold them for 3 years, 5 years, even better, that you'll win. In fact, just recently we've had clients who bought 6 months ago certain metals. I won't go into detail now, but I just spoke to a client yesterday who one of his metals had doubled in 6 months, in just 6 months. So there's a winning investment strategy, and I'm going to tell you what it is today. I've already been talking for 3 minutes and I haven't mentioned it yet. So here's what it is. Why out of the 45 metals deemed critical to all nations, why is only 8 or 10 relevant, or what makes 8 or 10 really relevant? So there's 4 characteristics, and the 8 or 10 metals we offer you would have one or two, in possibly some cases 3 or 4 of these characteristics. So the first one is diversification, multiple applications. Which metals offer you the most diversification in industry? So, for example, one of the big demand drivers at the moment is a artificial intelligence, right? So which metal, for example, would be, our AI obviously runs on data, but it relies on rare earths for computer chips, magnets, sensors, that power the servers and stuff like that. So that's just one driver, but there's energy transition, there's electric cars, there's wind turbines, there's solar, then defense, which ones. So we pick out the ones that have the most applications, that essentially are the upstream raw materials that become trillions of dollars in downstream GDP in many, many different products, both civilian and military. So these are the raw materials Tesla need, Apple need, Siemens need, Ford Motor Company need. So we pick out the ones that have the most applications. That's the first characteristic. The second one is what you might call the quantitative approach, which is which ones are the least produced. Hafnium is one example. Hafnium is used as a super alloy in jet engines, rods for nuclear reactors, and of course, as space technology becomes a fully fledged space industry, rocket engines as well. Now, hafnium is a byproduct of zirconium mining. So for every 50 tons of zirconium, we only get 1 ton of hafnium. There's only 70 to 90 tons of hafnium produced a year. You could fit that on the back of a big truck, you know. But the other side of that is that when demand increases, supply, there's an inelasticity or an inflexibility to supply because it's dependent on it's a byproduct of zirconium. So that's the second example, which is which ones are actually the rarest. Not all rare earths are rare. Hafnium is definitely one of those technology metals that is. The third one is demand. Which ones are the most in demand, as we just spoke about? AI now is a big drover, advanced robotics, aviation, defense industry, technology. Look, the world is pivoting from oil to metals, and rare earths are the new front line in geopolitical decisions. So right across the board, demand is increasing for these raw materials. But we do specifically look at what will be the drivers in the next 5 years. Where will the demand, most increase, so that our private investors can, have the potential for better gains or better profits. And then the last characteristic is what you would call supply concentration risk. Where is there very localized supply? You can't really mention rare earths in one sentence without mentioning China in this era. China has a sort of an unrivaled dominance in rare earths and technology metals. As we speak here, June 14th, I think just last week, there were talks in London between China and the US, and it was mostly about rare earths. I just read an article this morning that Ford Motor Company, the CEO, already said they have had to shut down some production because of the lack of rare earths. Suzuki in Japan shut down the production of the Suzuki Swift as well because of that. So make no mistake, when President Trump talks about critical rare earth minerals in Ukraine and Greenland, it's resources. It's all about resources. We're in a technology trade war since 2018, and this Cold War 2.0, if you like, it's not an arms race, it's a semiconductor race. Make no mistake about that. And we're heading into this period where investors can really, really profit from owning rare earths. So, just to recap, that's our winning investment strategy. There's one thing I would add to that, which is we recommend people hold for 3 to 5 years, 5 years better. We don't want day traders, although these prices are volatile and can be volatile. I talked about that on another recording. So you can't benefit from these sort of scarcity-driven price increases. But we genuinely like to invite private investors who are willing to stay in for the long haul and who recognize these 4 characteristics that I just explained. So thank you very much. Probably went on a bit longer than expected, but always a pleasure. Thank you.